What's up, everybody? This is Adam Aldaushi. I'm one of the vice presidents of this investment banking division of FIS, and this is kind of a new thing, but kind of decided to start uploading short form videos answering any concept questions you may have, and then we'll be diving into some technical questions, whether it being me or Brian or Emmy. They're both definitely better than me at technicals, so hopefully we can get one of them on these videos helping out with the concept question. But for now, we're gonna be I'm gonna just answer some pretty basic questions just to get us started and start building that foundation, especially for the freshmen and sophomores that are following us. The purpose behind this is really just we don't really have the bandwidth to host that many workshops, and in general, preparing for an investment banking interview, we can't cover everything in a workshop. This is something that you need to be practicing for months, kind of. Not like it's not crazy, but just like an hour or two every day for at least a couple months is what you really need. And I think videos like this, answering specific questions you guys may have, or like interview questions you've seen somewhere and you kind of don't really get it when you're just reading them online, I think this will kind of help with that. So we're pretty much going to start off pretty easy today, and I'm going to dive into what investment banking is and what investment bankers do. This is pretty self-explanatory on kind of why you need to know this, but you'd be surprised with how many people walk into an interview who don't really know what investment banks are and what investment bankers do, and they end up getting, asked the question and they kind of stumble, and it really is a bad look. So I'm going to just dive into what an investment banker does and what an investment bank does for, as a business, and we'll go from there. If you guys enjoy this kind of stuff, or you might find it valuable, let me know, or let us know by DMing the page, like the Instagram page, or I'll put up a poll or something saying, do you guys like this kind of stuff? And, would be happy to do more of it, because, at the end of the day, our goal is to help you guys break into investment banking. And, I have some free time on my hands, so, why not do this? So, yeah, again, we'll get into it now, and yeah, here we go. Started. We're going to dive into what investment banking is and what investment bankers do. Essentially, you're just answering the question what an investment banker does. It's pretty much just it's the same thing pretty much if you just answer that question. So let's get into it. So here's a very simple, concise answer that is sufficient enough if you want to give it during your interview. But an investment banker essentially works with businesses, advising them on capital transactions. That's a sufficient answer, but you might get asked a follow-up question to that, what are capital transactions? They might dive deeper into that. So let's get into it. Let's break it down. What is a capital transaction, and what do investment bankers do to advise on them? Let me take a step back. Basically, I'm a skin company, right? And my skin company has been growing for a long time, and I want to sell my business. I don't know how to sell a skin company. I just know how to produce skin products and stuff like that. So me, as a business owner, I approach an investment bank. An investment bank will help me sell my business by finding buyers. This leads us to the first kind of capital transaction. And essentially, a transaction is money exchanged for something else, or money exchanged for a business. You know what I mean? So the first kind of capital transaction investment banks advise on is M&A. M&A stands for mergers and acquisitions, and it's a pretty big capital transaction. Mergers and acquisitions. So a merger, let's dive into this. We'll start off with a merger, is essentially when two companies, usually of the same size, come together and combine their business operations. For example, let's go back to the skin company example. I'm a skin company, and I develop skin products that make your skin look better. I merge with a makeup company that's the same size as me, and they make makeup and I make skin products, and makeup gives you acne, so you're going to buy the skin products to get rid of the acne, and it'll make sense, you know what I mean? So it's when two companies with synergies merge together and combine their business into one. They become one big company. All right. An acquisition. An acquisition is when a company outright buys another company. And it's usually, or in most cases, pretty much all cases, the acquirer or the buyer is a much larger company than the person being, or the company being bought. So for example, I'm a skin product, like I'm a monopoly. I'm a huge skin product. I don't know, CeraVe. I don't know if you guys know what that company is, but I'm a very big skin company and I have a huge market share, and I'm buying up these smaller companies that would add some sort of value to my product offering or something like that. So me, a skin company, I go acquire a smaller company that makes their own line of like vegan skin products, and my company doesn't have any vegan skin products, and I don't want to go through the R&D and the product development of making those kind of products, so I just go and buy someone else who has already done all that work. So that's pretty much an acquisition and why acquisitions happen. And essentially what investment bankers do, as or provide us advice, is they find buyers for these companies. Like, again, I'm a skin company. I went to the investment bank and I'm like, hey, find me someone who would buy my company. That's one of the main things that investment bankers do. Two, they provide valuations like, oh, this is how much you should pay for this company, or this is how much you should sell your company for. By like, we're not going to dive into the valuation techniques, but that's another way of, another function of what an investment banker does. And just overall, they help with the process. They market the business, find buyers, provide valuations, pretty much just kind of spearhead the M&A process for these businesses. So that's one, and that's a very big function of what an investment bank does. Let's go to the second one, and sorry, this is not going to be pretty. And just like kind of like a disclaimer, again, I'm a junior. I'm 20 years old. I'm just providing you with the answers I gave and what I know. It worked for me and got me the job, but it doesn't mean it's going to work for you. I want you to look at these videos as a foundation to build off of. These are key terms that you can then just go and do your own research on. I'm giving you the terms and what you need to know so that you can go and build your own, knowledge and your own answers. So again, like the whole purpose of this is to, show you what you need to know. Okay? So let's resume. So again, take everything with a grain of salt and do your own research just in case I'm wrong about something, or, you can answer something better. This is just what I did. Okay. Another function of what investment banking does is they help companies raise money. And what do I mean by this? There are two ways a company can raise money. One, is by issuing stocks or, raising equity. And companies usually do this by going public. Equity, IPO. So essentially, what an IPO is, it stands for initial public offering, is when a company, either maybe they're like low on funds or they want to expand their business operations and don't want to take on that much debt, they go to the public market to raise equity. And by doing so, they offer investors, like your average Joe who wants to invest in the stock market, the chance to buy shares of their company. Kava, everyone likes Kava, Middle Eastern version of Chipotle. They went public recently, and then it lets me buy shares of Kava because I know it's a very good restaurant. People love the restaurant. I want to invest in that business. So that's a very good way of raising money. If a company, just wants to expand their operations or wants to raise capital for some reason, that's one way. And then the other way, pretty easy, is going to be by taking on debt. And you don't have to go into like what exactly an investment banker does past this. Like, I don't know. I've never been asked past this stage of like, oh, what are the two different ways of raising money? You can issue equity or you can raise or take on debt. That's pretty much, in my opinion, sufficient enough. I guess you can just say like, I think that's good enough. I don't think we have to go deeper than that. You could say maybe for IPOs, the investment bank helps the company set the stock price by determining the value of the company. Which again, we're not going to dive into the valuation techniques in this video, but we will in the future. But yeah, you can say that if you want. Okay. And then third, I like to say that these two are sufficient enough in your answer, M&A and raising money, but you can also, there's other things an investment bank does, by the way, but these are like the big three in my opinion. And again, it's what's sufficient enough. And again, do your own research and all that. And the third is going to be helping companies allocate capital. And what does this even mean before we dive into deeper? So a company may approach an investment bank and they're saying, hey, I have a lot of extra cash on my balance sheet. What should I do? Should I pay off my debt? God, this thing is annoying. Should I pay off my debt? That's one thing they can do. Can I type? All right, pay off debt. That's one. They can reinvest into the business. That's another. Reinvest to business, or they can pay out dividends to their shareholders. Dividends to shareholders. Okay, good enough. All right. So this answer, in my opinion, this is very ugly, but it's okay. I think it's more than enough when if you ever get asked the question, what is investment banking and what do they do? And if you just really understand this, I think you'll be in a good spot. There are other things investment banks do, like they provide a lot of, they pretty much act as like a consultant in a lot of cases to businesses and helping them with their nuanced problems or their nuanced financial problems and like providing them with their professional advice. But these are like the big three in my opinion if you want a specific answer. So again, let's circle back. An investment banker essentially works with businesses, helping them with capital transactions. Those capital transactions being M&A, raising money, or helping companies allocate their capital. There's an analogy. I like to think of an investment banker as like a real estate agent or someone selling houses. They help find buyers for someone who wants to sell their business or sell their house. They help them find buyers. And essentially, if you want to know how an investment bank makes money, in the case of a merger or an acquisition, however large the transaction, like say company A bought company B for $10, the investment bank will take a percentage out of that, that price, that $10 the company bought it for, and put it into their pockets. Like say they take a 10% fee, which is super high. They'll take $1 out of that $10 and keep it for themselves. So that's pretty much what an investment bank does. And yeah, if you guys want to, if you guys enjoyed this video, let us know on the investment banking page. I'll put up like a poll asking if you guys like these kind of format videos, like these short format videos. And I'll also add a poll where it's like, ask us questions on what you want a video of. And then, I'll try my best to dive into it. And then hopefully I can get Brian to start making these videos, these technical videos at least, because he's much better than I am at these. And he was my mentor. So thanks for listening. Thanks for watching. And yeah, let us know if you have any other questions. And hopefully this helps you guys get started.